I'm doing things completely backwards this time. We're making it work though.
No, that's okay.
He's earning his dollars this time.
One thing about internal audit is we know about following rules and directions. So if there's any other buttons that I can press, just pass it on.
You are ready to go and prepared for that.
That's right. Even on the fly.
Hi, and welcome to TMC Connect. We will get started at the top of the hour. Looks like we've got about 1 more minute. Thank you for joining us. Well, looks like we are at the top of the hour, so want to get started. Thank you so much for joining us. This is TMC Connect. I am Tony Bramley. I'm the Director of Business Development here at TMC, and with me today is Scott Weintraub. He is the Vice President of Compliance with MQMR. Hello, Scott. How are you today?
I'm fantastic. How are you, Tony?
I am doing really, really well. Thank you so very much. Looking forward to our conversation today. If it doesn't make dollars, then it doesn't make sense. We're going to be talking about all things internal audit. Just for the folks that are on the call, so that you know you have joined us on mute, but we do want this conversation to be engaging. So please drop your questions or your comments in the chat, in the Q&A, and we will address those as they come in. And there'll be a follow-up email that comes out tomorrow with a link to this video recording, as well as contact information if you want to follow up with Scott or MQMR. So once again, thank you guys so much for being here. And without further delay, Scott, I'm going to let you take it away.
Tony, thank you so much. And thanks to everyone at TMC for having me and allowing me the chance to speak to everyone today. We're grateful, especially to talk about such an important topic, which is internal audit. And so as Tony said, we're talking about internal audit. If it doesn't make dollars, it doesn't make sense. So I think a lot of us in the industry have thought about internal audit as something that's necessary to have, or maybe not the most exciting thing. I want to talk about internal audit over the next half hour, but also challenge that premise a bit, and to have us hopefully walk away thinking that internal audit can do 2 additional things for you and your company: save you money and actually help you make money. And so we're going to get to that today. Here's our agenda for the next half hour, or slightly less than that. We'll talk about what is required. And that's an important point that we'll mention at the top, that internal audit is a required element that you need to have within your organization. What are the key elements of an internal audit program that you need? And again, then we'll get right to how, in addition to helping fulfill the regulatory and agency requirements for internal audit, how having one and having a robust internal audit program can help your company save money and even make money. And then we'll talk about what are some next steps. What can you do going forward to help you save that money and make that money? And then we'll leave time for questions at the end. So we can go on to the next slide. Thanks, Tony. Okay, so let's start a little bit at the beginning. What is internal audit? And one of the things we've seen in talking with clients about this, that sometimes internal audit is spoken of or thought of in the same way as maybe your quality control function, reviewing loans, either pre-funding or post-funding. Internal audit is a very different thing than that. So what it is an independent, objective assurance and consulting activity. And the next point's really important. For all of our clients that we work with at MQMR, every internal audit project in which we engage with them is designed with a goal to help add value to the organization and improve their operational effectiveness. And we'll talk about that. It's not just to check a box so that Fannie Mae or the CFPB will know you'll have internal audit. Your company will be better off at the end of every internal audit engagement that you have, because you'll get information, tools, and resources to help your company improve and operate even better than the great company that I'm sure it already is. Secondly, the approach to internal audit, again, will help evaluate the effectiveness of how you're identifying risk at your organization, how you're complying, hopefully, right, with all the laws and regulations that are out there, and what's your corporate governance. And a company like MQMR can help make suggestions to improve all of those things. So next slide, please. Thank you. And so again, let's start at something I touched on before. Is internal audit required? So can't state this more strongly. Absolutely yes. And it's required from several different entities. So first, here's Fannie Mae. In their selling guide, it talks about a seller servicer must, and so that's a word worth stopping at right there, must have internal audit and management control procedures to, like it says, evaluate, look at the quality of the loans you're producing, selling to Fannie Mae, servicing for Fannie Mae, to the quality of that loan production on the origination side and the servicing side as applicable. And when you go through a MORA review, that is absolutely one of the things that they would be requesting. Your internal audit plan and schedule for that given year. And are you executing on it? Do you actually have the internal audit reports of various different departments? So that's number one. Fannie Mae says yes, required. So next slide. And again, they go on. They have specifics about what should be included. It needs to be an independent function from operations or sales within your company. So independent audit should be completely separate and independent. And again, it's another reason to think about a third-party company like MQMR, because we're outside the company as a whole. And again, it cannot share reporting lines, particularly with any function being reviewed. And the internal audit function, whether it's internal or through a company on the outside, needs to report and answer to senior executive management and or a board of directors. So Fannie has all of that in their guide. Okay, well, how about Freddie Mac? Do they require it? And again, the same answer, absolutely yes, again. So when we think about Freddie Mac, as Fannie would do a MORA review, Freddie Mac would do a core review. And a core review has three phases, as all of you who've been through one know well. There's the pre-review portion of the review, then there's the on-site review, and the post-review. So if we look at the next slide, where does internal audit come into play with a core review with Freddie? And it's part of that first phase. In that pre-review portion of the review, and all three phases are equally important, Freddie would conduct a series of conference calls to talk about all of the areas that are listed on this slide, including, of course, internal audit, the one highlighted in green. And so they will be asking, what is your program? What types of reports are you doing? What risk assessments is your organization doing to determine the internal audit plan for this year, for the following year, etc. So that's all part of the first phase of the three with the Freddie Mac core review. So that we're 2 for 2 on agencies that require internal audit. So if we look at the next slide. So leaving the GSEs aside, how about the Consumer Financial Protection? Well, again, it's the same answer. Absolutely yes. The CFPB, when examining entities, will be looking for the same thing. As part of their review of the compliance management system of an organization, they will be looking at internal audit. And there's a bunch of questions that are on this slide that the CFPB will be asking, right? Who did them? What was covered by them? Was there loan level testing involved? Or on the servicing side, did it include a review of calls? So there's a lot of in-depth look that each of these entities will take, not only making sure you have internal audit, but is your program robust enough to meet their requirements, to satisfy what they're looking for? So that's the CFPB. As again, you're catching the theme, everyone is giving the same answer. Yes, internal audit is a required function. So now that we know that it's required, it's not an optional thing, it's not a nice to have, it's a must have. So what are the key elements of a robust and effective internal audit program that will satisfy the requirements from all of these agencies and regulators? So there's three parts. There's an initial risk assessment, ongoing internal audits, and an annual risk assessment. So we'll spend a minute talking about each of those elements. So the first one, so for example, when we would work with a new client for internal audit, the first step is what's called an initial risk assessment. It's a chance to learn about this new organization and to focus on any and all internal and external risks to your organization. So it would touch on some level all of the different departments and functional areas that your company has. And a big goal with it is learning about how all of your functions are performed. How is it managed? How is it reported up to your leadership, up to a board if you have one? And then again, with the goal of where might risks to your organization be found? And that will help determine what is the best and most effective internal audit plan for your organization. So if you think about it, what is the output that you would get from an initial risk assessment? As part of the report that would go through everything that was conducted as part of the risk assessment, a company would also receive an internal audit plan that would have a couple of pieces. A 12-month internal audit schedule. And so that's based on where the risks might be with your particular organization. What are the departments or functional areas that ought to be looked at first over the first 12 months? And then there's a 36-month plan over a 3-year cycle that agencies and regulators would be looking for. How does your audit program get to each department or functional area that you have over that 3-year cycle before you start over? What you'd also get would be a list of best practices recommendations. As part of the risk assessment, for example, when MQMR would do it, we would identify areas based on review of documents, based on interviews we'd have with each function, where are some areas where we might have some ideas or suggestions for best practices that your company can improve. So that's the initial risk assessment. Then what happens most often is the actual ongoing internal audit. And so what we would say is that, and what an agency or regulator would be looking for is every quarter, at least one department or functional area ought to be being audited. Ideally more than one, but at least one department or functional area every quarter. And so what does an internal audit look like? If, for example, there would be an audit of your operations function, or of your compliance function, or of your information technology function. Well, with a good internal audit partner or program, there would be 4 different steps. One would be a review of documentation, right? Policies, procedures, any checklists, training materials that help that function be performed. And then there would be an interview with the management of that function to talk about how that department runs, what functions they perform, who does them, how the department is managed, what are their goals and strategic objectives, all of those different things. There would also be a walkthrough with actual frontline employees. So if it's an operations audit, for example, we would want to see a processor or a closer or a funder actually do a screen share with us and literally walk us through the process. It's an invaluable part of an audit where we can see what's actually happening. And then, as for example, the CFPB stated specifically, loan file or transactional testing, that shows at the end of the day, how does your product turn out? How do your loans look at the end of the day? And so what's the output that you'd receive? It would be an internal audit report that could have findings, and listed on the slide are the 2 buckets generally where a finding could occur, right? Non-compliance with a law or regulation, but also if you have company policies and the company isn't following, right? That would be an example of a finding as well. And again, any observations that there might be for best practices should be part of an internal audit report, as well as if there are findings or observations, what recommendations might we have for how a company could mitigate and hopefully eliminate that risk? So that's most of the work, right? The audits of each department or functional area. Lastly, every 12 months, there would be an annual risk assessment. And the biggest area of focus with the annual risk assessment is what is new or changed about your organization over the last 12 months. And on this slide, you can see we've listed a bunch of examples of things that might change from last year to now, right? Over the last 12 months. Could be new states where you're in business, new business channels. So that's really important to know because it might impact the internal audit plan or schedule for the next year, depending on how your business has evolved over the last 12 months. And so again, what is the output from that annual risk assessment? That report would include what's the internal audit plan for the next 12 months? Are there any changes to what was on the 36-month plan, for example, that might have been received the year before? And so that's the second part. The 36-month plan would either be confirmed or maybe updated or changed based on what was discovered in the annual risk assessment. So those are the parts, the pieces of a robust internal audit program. Okay, so now in the second half of our half hour, let's talk about other benefits that you can get. Importantly, how can internal audit save you money and make you money? We've gone through how it's required, right? Why you have to have it from that perspective. We've gone through what's involved in internal audit, but let's get to the good stuff. How can internal audit actually save you money? Well, let's start with what happens if you didn't have a robust internal audit program and you weren't catching things, you weren't identifying risks. If that leads to non-compliance, for example, with applicable laws or regulations, there's a whole list of things on this slide that could potentially happen to your organization, and they all have one thing in common, which is they'd all be bad, right? Anything from restitution to an individual borrower that might be affected, all the way to suspension or revocation of a license or potential liability in a lawsuit. So any areas where an internal audit program would identify a risk, that would be an opportunity for your organization to correct those items, update policies or procedures, add system enhancements that would save all of the money, reputational harm that could also cost your company business for any or all of the things that might happen on this list. So again, that's a start for how it can save you money. Now, what this slide talks about is a directive that was just issued last month by the Consumer Financial Protection Bureau. I won't read you all of the language on this slide. I know you'll all get this, but I just wanted to make a couple of points of what this directive was from the CFPB. They said two things. One, that in their view, state regulators are allowed and have the right to bring either a civil action or a criminal action against mortgage lenders for violations of federal law. So think about that for a second. States can bring actions if they think you're violating the TRID rules or maybe the servicing rules from the CFPB on the servicing side. They can bring actions against your company as a state regulator. And in fact, they're required to tell the CFPB when they do that, so the CFPB would know about it as well. And secondly, it also talks about that states can use the same UDAP law that the CFPB, as we know, has been using for quite some time now. That a state can say any action or practice or policy that they might find unfair, deceptive, or abusive, states can do the same thing. They can rely on that section to pursue an enforcement action against the lender under UDAP. And so it basically gives the state very similar and broad powers that the CFPB would have. So I just wanted to point that out. It makes what we're talking about today even more important than it already was. Okay, so again, how can internal audit save you money? It will ensure wherever the risks might be coming from to your organization, that you understand them, right? That the company is aware of them and that you can prioritize them so you can manage them appropriately and allocate resources to mitigate the most important ones, right? And here's a big one: to uncover potential risks that might otherwise go unnoticed. I can tell you from our company's experience in working with so many mortgage lenders in the industry, a big topic of conversation that we have with clients is they don't know what they don't know. And that's where we can help. That's where a robust internal audit program can help. It will not only find risks that you know of, how big they are, or risks that you think might be present. It will also help uncover risks that you didn't know were present. And it will give you an opportunity to mitigate them or eliminate them before a regulator or an agency finds them. There's an analogy that I was talking about with someone at our organization that I think is really appropriate here. Imagine you're on a boat, right? And there's a hole in your boat. If you don't know that there's a hole in your boat, and or if you don't know where the hole is, then water's going to start coming onto the boat. The boat's going to start flooding and sinking. And if that hole isn't patched up or closed, then it's going to be taking on more and more water. And then you'll be finding yourself with a bucket, right? Trying to dump the water out as it comes in. And that water is going to keep coming in as fast and likely faster than you can shovel it out with the bucket. But if you have an internal audit program, then what that program will do is it will find that hole for you. And we might find it before you would even find it yourself. That's number one. But number two, you'd be able to know, how big is that hole? Is it the size of a dime? Or is it the size of a silver dollar? Or, as I was told, is it the size of something called a 1-ton gold kangaroo coin, which I've learned is the largest coin in the world. Hopefully that's not the size of the hole in any of your boats. But no matter what the size of the hole in your boat might be, internal audit can help you find it and help you patch it up before your boat sinks. And again, think about how much money, time, effort, and resources that saves if you find it proactively, because as part of your internal audit program, you went looking for it, right? Or you partnered with a company like MQMR to help you look for that hole. So that's this slide. And again, what are other ways, again, that we can help save you money, help you make money? In addition to finding the hole in your boat, for example, what about redundancies and inefficiencies within your organization? Or what if you have branches all over the country and things are being done in different ways? Internal audit can help find all of those things as well. And again, as I mentioned at the beginning, at the end of an engagement with internal audit, you will know not just if there might be any laws or regulations where your company might not be complying. Of course, you'd find out that. But what about if there are ways that your company could operate more efficiently, more effectively? Maybe there are some processes that are being done manually today, that there's an opportunity to automate that with a system enhancement or some other type of solution. And again, where are those best practices that could take your company from where I'm sure it is, right, way up here, and get it even higher, right? And again, obviously, any laws or regulations that your company might need help with, those would be identified, and to make sure that you get the recommendations you need for what your company can implement to mitigate those risks. But again, think about it. You not only get that, but you would also get, where are my operational efficiencies, right? Where, and that is another way that this can save you money and resources and time and get more loans in the door through your process, closed and funded. So that's this slide. Thank you again, Tony. And so again, I just wanted to give some examples of real life, recent consequences when you don't have a robust internal audit program in place. And there was a recent settlement with the CFPB and the DOJ with a bank, right? You'd think a bank would have everything in place that they need. They didn't. And look at these dollar amounts for penalties, plus programs they'd have to invest in. Any of us lending in California knows that there are many settlements related to per diem interest, what the penalties are could be, and auditing that a company would have to pay for. These are all things that cost your company lots of money after the fact, because the regulator found the issue that the company didn't find themselves or didn't have a partner to help them find. A robust internal audit program would have found these issues earlier and provided recommendations to help prevent what happened with these settlements. So that's that slide. Yep.
We have a question.
Sure.
Our internal auditor reports to the compliance officer. Is that sufficient?
So I think a little bit, it depends on what's meant by that. For example, if within a compliance department, they, for example, are auditing loans, that's great, right? Every company should be doing that. And those audit reports, if compliance is looking at loans and, for example, said this percentage like violated TRID or whatever, that's great. But that is also separate from internal audit, because what internal audit does is it looks at the functional area itself and says, is it doing everything that it needs to do, right? And so, for example, one audit or functional area, Tony, that would be audited would be compliance, right? And compliance can't audit themselves, for example. And so an audit of a compliance department would include things like, do you have all the policies and procedures that your company needs? Are you doing auditing of loans every month? So that was a really great question. A compliance department doing audits of loans, for example, is really important and should absolutely be done. But that's one piece of that functional area. It would not replace an internal audit program.
Gotcha. Thank you.
Absolutely. Okay, so now let's talk. We talked about how internal audit can save you money. As we're close to the end of the presentation and the half hour, how can it make you money? Well, internal audit can also help your organization find lost revenue. And everything on this slide are real life examples of how MQMR has uncovered things like what's on this very slide and helped these clients make more money. Number one, for example, identification of overpayment of commission to loan officers. For example, when you compare actual commission paid to loan officers for loans, it's more than what's in that loan officer's compensation agreement. And as you can imagine, the loan officer's not going to be jumping up and down saying you paid me too much money. But that's something that we've been able to find for clients. Or overtime pay. We found miscalculations of overtime pay, people being paid more than they ought to have been paid. Or the last one I think is really important. Pricing exceptions is obviously a big deal. It's a big focus of regulators, particularly the CFPB. And we have found a lot of examples of, for example, companies that are not really tracking pricing exceptions at all. Or if they have a policy, it might not be being enforced consistently. Or for example, there might be a policy that says every exception has to be approved by the secondary marketing department. But there are ways where sales managers, for example, could go in and do a pricing exception themselves. That costs a company money, right? We can help you find these things, and that's added revenue that you'll be able to get, revenue you won't lose, more money coming in the door that you can keep. And these are 3 examples. There will be others that we can find for clients. So to end, what does all this mean? What should you do next? Well, here are some questions that we think coming away from this presentation that you could ask yourself about your company. Do you have an internal audit program like what we've described over the last half hour? Even if you have one, is it adding value to your organization? Are you getting reports that look like what we talked about earlier? Are you getting risk assessments upfront and annually? The reports that you're getting for each department or functional area, are those reports robust? Are they giving you recommendations for how to improve your operations? Are there best practice recommendations in there? Thirdly, have you been able to document that it's prevented issues from being found by regulators? Has it saved your company money, made you money? And at the bottom, we think this is an important goal for internal audit as well, part of our mission. Has the program helped your company achieve your strategic goals and objectives? And if you think the answer to any of those questions is no, or even might be no, you have an opportunity. And your opportunity is to enhance or upgrade your internal audit program to reap all of these different benefits that we've been talking about. And so with that, if you want to learn more about internal audit, if you have any questions about what you heard today, you can obviously reach out to me or MQMR. My contact information is there, but also this QR code will work if you scan it. And by the way, it's not the QR code, it's the MQMR code. You can scan that and it will take you to a page where you can get a white paper. You can also reach out to us about the white paper. And I think everyone who attends this webinar will receive a white paper about internal audit from MQMR. It's called, by the way, for all you superhero fans, the fantastic 4 ways that internal audit powers cost savings. So through the superhero reference in there, but you'll be able to get that white paper with even more information than what we talked about over the last half hour. But having said all that, Tony, I think I just made it within the time. I'm so grateful for the opportunity that you provided me to give this chance to talk with folks about internal audit. Thank you so much.
Oh, Scott, it was our pleasure. Thank you so very much. We appreciate everything you always bring, great content. So thank you for that. Thank you to MQMR for being such a fantastic preferred partner for the TMC. For all of those on the call today, yes, you will receive a copy of this deck as well as a copy of the white paper. I did just check the MQMR code and it does work. So I do know that it does work. It did take me right to that fantastic 4 ways internal audit powers cost savings. So anyway, thank you so much, Scott. Appreciate you. Thank you all to everyone who was here today. And please come back to TMC Connect in the future and join us for other sessions. Appreciate you. Thanks so much, Scott.
Thanks, Tony. Thanks, everyone. Have a great day.
Y'all too. Bye-bye.